Blueberry, we are in a dire situation for the whole of the DeFi ecosystem. The founder of one of the biggest protocols in crypto, Curve, he has like a $300 million position on Aave. He's effectively dumped his tokens on the money market protocol. I'm going to show you what this actually means. So we actually have, this is his actual wallet. I know you are a pumpkin and you are also a blueberry pie. Thank you very much for liking, subscribing, pressing the bell button on all. So this is actually dbank.com. You can actually put in his address here and you can view it. You can see, yes, he's got $215 million. But unfortunately, what's happened is if we scroll down, we can see his Aave liquidation price here. So Aave is the borrowing market. Now, his health is 1.57. In normal circumstances, you are fine. You're going to be fine. We're at the bottom of a bear market, etc. Here's the problem. Do you see this big number here on the right? $180 million. Everyone can see this. Here's the unfortunate part. This is how much he's borrowed. $63 million. So he needs to somehow pay this off. Unfortunately, there is not enough liquidity on the Curve bids of all these tokens he owns because he has such a big amount of the supply, okay? But I want to give you an update because, yes, this is very dire. It can send the whole DeFi ecosystem to zero, cascade liquidations. You know, if I show you this on-chain price here, we go down, it actually traded near zero. Isn't that funny? But ChainLink, the ChainLink Oracle saved him, okay? Now, if you want to know exactly where his liquidation price is, it's around 36 cents right now, down here. I know it looks dangerously close, man. Dangerously close. And yeah, it is dire. But you're probably wondering, how isn't he liquidated because it went down here? Well, what happened was, ChainLink, thank God, their oracles do not just look at the Ethereum blockchain as one source. ChainLink grab a weighted average from Binance and other centralized exchanges. So they assume these companies don't want to lose money and they will have proper feed. So they get an average of everything. And it only took the average of the prices. So it did not give you this price at the bottom of literally zero. And it's great. If you can show you down here, you can even go down to 1 minute. I want you to see how important this is because this is how these things, this is the mechanics of how they go. Because when they code this stuff, they go, well, if you go down here and you close for like, you know, for like 30 seconds, that's like enough for a block. And they go, well, you're basically at zero here and we're going to count that towards the liquidation because it doesn't want to liquidate people unless the price is truly there and fair just to prevent any manipulation. And to give you just a quick update on what he's been doing before we explain further, he's been trying to pay off his Curve debt. So he's cashed out of Curve. He put $300 million. Remember, he has all the tokens. He's the founder. Okay, he basically gave the coins to himself at the start. Right? It's not exactly that tongue in cheek, but you get the point. Okay, yes, he was able to give the coins to himself. So, and you can see it right here. Yeah, you can see here 180 million. It was 300 million before, but because the price is going down so much, it's down to 180 million. You know, so he was able to put it on there, grab $60 million. He actually bought a big mansion, which is a meme. I'm going to show you the picture soon. And if it goes down, there's giant cascading liquidations. The whole system gets into dire position. But he's been able to find some OTC buyers. So in just one of these transactions, we can find, right? Shout out to the baby doll who found this. The Curve founder, right? So he moved money from another protocol and he had freshly created wallets. And what he was able to do is he received like $6.5 to $7 million of tether from those wallets. So obviously a stable coin. And we're all postulating now it's most likely an OTC deal, which is over the counter. So he's found someone. They're like, well, you know, we're willing to buy it off you now, assuming this thing survives. And look, these types of situations, they're crazy, friends, because, you know, we're all sitting here like, oh, I'll never buy it. I'll never buy it. But there are people out there watching these and they're like, man, if this protocol doesn't go to zero, this is the buy of a freaking lifetime. So I don't know what price they were able to get it for. He's probably able to transfer some coins, maybe just give him some debt, and he'll be able to just pay off this loan over time and slowly bring it down. But he's got quite a while to go here. There are rumors that maybe it's got to do with Justin Sun or somebody else. So these big players, it reminds me of the game that Warren Buffett plays. There's only like 200 companies you can really look for, and it's the same companies. And because your gun is so big, you can only hunt elephants. So these people, they only make these big power moves in these times of strife. You know, maybe me and you, lucky, will one day in the future, we'll be lucky enough and blessed to be able to participate in something like this. But these situations are very rare. And as you can tell, You need a lot of balls, man. I just showed you the chart. So this is the curve chart on Binance, right? But it's bouncing up a bit. But you do need an absolute gargantuan elephant-sized pair of nuts for this one, because just imagine you got in. See, whoever buys it, though, it's not the end of the world, because whoever buys it, they are basically saying, well, I'm long spot. So even if it goes down and it cascades, it is what it is, you know? They're probably happy to buy more, and it would be very limited for it to go there anyway. Limited in time, limited in liquidity. Also, crowd favorite GCR, he's got $1 million of bids down here. So he would basically wipe out this guy's business. If he got filled, man, it's like 98%. So this is the crazy part. He's got $1 million, but it's equal to $50 million today. So he can buy this guy's basically $300 million position. He can buy his 60 million of it for just 1 million if it gets down there. But like, let's pray it doesn't get down there. We don't know what's happening. A lot of people are like really nervous that this thing will cascade all the DeFi protocols, okay? But, you know, we can have a story here from the Autism Capital to speak about what actually happened, okay? So here's his actual mansion, okay? So several months ago, the Russian founder of Curve, Mikey Agorov, took out a $100 million loan to purchase this ultra-tasteful house. I mean, yeah, friends, like, don't worry about the house, man. See, the house now, it's basically an NFT. You can't sell the house fast enough to repay this loan. It's crazy. So this is how I was able to do it. So then, unfortunately, for Michael, Curve got hacked 2 days ago. The hacker made off with millions of dollars. This is bad, right? But this was just the beginning of his troubles. So this is what happens here. The hacker had about 7 million curves. So it's not the end of the world, right? He had like, $5 to $7 million. By itself, it's not a problem. There's enough liquidity to handle this hacker exiting. Next part. The real problem is that everybody can see this position. You see this? Everybody's got this D-Bank on the internet right now, friends. Everyone is looking at this. Everyone's looking at this curve price. Everyone's looking at, oh, is this going to go down? Is somebody going to come and ping it and just smash it down? By the way, if you are out there on leverage, I want to tell you something right now. Everybody's short already. I don't have the data in front of me, but everyone is short. People are paying enormous rates to be short on Curve. And because I love you very much and I respect you, thank you very much. You like, subscribe, bell button, or share with your friends and family. I actually found for you the funding rate here. You can go to this website, right? coinglass.com. See in the top left, friends? coinglass.com. I just Googled it. /funding/curve. You can find Curve CRV and look at the right-hand side. You see this deep red? It just shows you everybody just like enormous short positions. Now, do you see these negative numbers? You see, look at this. This is crazy. This is a period every day. So look at these rates. This is like, I think it's every 8 hours or every 24. It's every 8 hours. Wow. Friends, this is huge. Look at Binance up here. Do you see this? See that Binance number? The Binance one is minus 0.34%. That means every day you are losing 1% of your entire capital. That's nuts, man. Wow. So if this position just stays here for a week, you've lost 7% just holding your short. But also, if you're long, you'll make 7%. Okay, so this is the funding rate because people are borrowing and lending from each other. That's right. To get short, you got to borrow off somebody else, right? But you can see it's super negative everywhere. It's crazy. Everybody's short. That's why these moves, if they don't go the way everybody thinks, they can give a big, powerful short squeeze. They can. They can give a big, powerful short squeeze because everybody's short. Because not only is everybody losing money by the position going up, if it happened, but people are also losing money every 8 hours. It's just sucking away at their capital. And it hurts people because it adds to their risk. You got to think about this. When people put on a trade, how much do they risk, right? They might risk 2%. Well, a lot of people, they can only be in this for like 2 days. Then they're losing too much capital. Then they might lose 2%. And then if Curve, like this is crazy. If Curve goes up another 10%, oh my gosh, they're like, they've lost 12% on it. On that trade. How much are they really trying to make here? They're trying to make it down here, trying to make 45%, risking 12. So this is the crazy thing that's happening when you're involving these speculators trying to play around in thin markets. And of course, they make a joke here. Curve is currently dumping like a poop coin, getting text messages from Gary Gensler himself. So it's a stop hunting thing. So markets are cruel, friends, because when everyone knows your weak point, what people do is they say, well, all I have to do is spend X amount of dollars and I can make this person force sell. Like, just imagine there was a whale who had a $100 million buy up at $1 for Curve. And then you calculate, you're like, wait a minute. If I buy $10 million worth, then this guy has to buy 100 million above a dollar. You will do that, right? Because you force him in. Well, it's the same thing out, just the opposite way. You know where there are evil predators out there that will try force people out. I've seen this happen in big markets, traditional markets. They will also always try to sniff big positions, and they'll hunt them. They'll hunt them, and they'll make even bond spreads out there in the real world. Bond spreads, yes, they'll collapse and do things in bond spreads just to get big funds out. It's a very nasty game. When it's rare when it happens, but man, they're big battles. So there's also a bit of a pickle here as well, because when he's borrowing, right, when he's borrowing himself, his short position, the yield rate is doubling every 12 hours because he's paying to be short. He's dumped his tokens, he's borrowed the coin. So because everybody's pulling the liquidity on the protocol, his interest rate is like going up huge. So look at this. If nothing changes, 59 million curve will be dumped on chain. There isn't even enough liquidity to handle 59 million, but that would just be the beginning. So they're talking about the cascading liquidations and all of these, right? So when it comes to these, I mean, they talk about they would have to sell $63 million of Aave on the open market to pay it off. That's if Aave gets into bad debt. But they have $330 million in there. So Aave itself is going to be fine. But this guy's a founder of a protocol, DeFi protocol going down. So you can see this tests everything in the system. It can get very nasty with these. So at the time of writing, right, his liquidation point was 38 cents to 40 cents. And it was currently 50 cents at the time writing. So now where I'm showing you the update, it's now 58 cents. And he was able to bring down his liquidation. I think it's down to 36 cents. So we're watching this in real time, watching him do these OTC transactions. He's trying to slowly pay this off. Maybe he can find people bit by bit to do that. Because the more he can lower his liquidation price, the more money it will cost someone to come in and be a predator. But don't forget as well, there's also big people willing to buy. You know, so that's another thing, man. If somebody tries to hunt you down and they can't do it and you're buying off them, well, guess what? They have to now cut and reverse, and everybody's got to cut and reverse with them. So, see, it's a game of tug of war every time. And just a friendly reminder, right? This whole industry, friends, it's a proof that DeFi works. It's working as intended. No one has any special rules, no bailouts. Doesn't matter who you are. It is a brutal free market governed by math and code. In another sense, it's a black eye for the industry at exactly the wrong time. It could easily set us back months or years as skeptical boomers who were thinking of dipping their toes back. Don't worry about this little FUD part, friends. Let me tell you right now, we already know. I've made, how many videos have I told you? Ignore all this stuff. They're here for the green candles, man. They're here for the green candles. If Bitcoin and Ethereum are going up and things reverse and we don't go to zero and we start going up and we start going into better times, people will completely forget about this. You want to know? Go look at 2021, okay? Friends, in 2021, nobody was talking about the disastrous BitMEX liquidation cascades. Nobody was talking about how thin crypto was. Nobody was talking about how dangerous the whole industry is and its volatility. No one. When we had Michael Saylor laser rise up there. Think about the crypto industry was so disastrously volatile and disgusting, minus 99% down in 2017 to 2018, right? That move. Did that stop Michael Saylor from telling everybody to go mortgage your house, buy Bitcoin, and to go be hyper moonboy at the top? It did not stop him at all. So don't be fooled by this. This is why, see, Mr. Autism Capital, I don't know if it's a person or a group of people, but they're very like, you know, they might wear glasses, they've got a couple of checkered shirts, they wear a couple of pens in the front pocket, the back pocket. So they overthink things a bit. Don't forget, we're all monkeys at the end of the day, okay? People are here for the green candles. When the moon cycle changes, Earth keeps spinning, people are just eventually just wake up and go, you know what? We just want to go up. That's just, you'll feel it, friends. You'll feel it. That's why the Bitcoin BlackRock ETF, yeah, it is eventually a Trojan horse, but, you know, we might enjoy it because it might bring forward a lot of good times, fun, and happiness and help change the mood faster. But we're going to have to deal with the ramifications for that another time. Tell mum and dad we're still going to make them. Please tell mum and dad, do not bid curve here. It is super dangerous. But we're praying that curve makes a recovery for the whole industry. Give mum and dad a big hug and kiss for me. Like, subscribe, Bob Norman, and catch you in the next one.